Okay, welcome back. You got the market, which is doing just fine, 20 points higher, 24,350 is where we are at. Dinshaw Irani is with us, of Helios Mutual Fund. Dinshaw, good to have you with us here. Thanks very much for your time. You know, if you look at WhatsApp groups, the stock market kinds or otherwise, there is only one topic which is being discussed, which is the India-Pakistan situation. And it's just some of them really, going into what can happen, simulations, this, that. The market here is just happily chugging along. We're up 20 points. What's your sense? I mean, there are some reports which came through which indicated that there are some operations being conducted, but within our borders, security operations, etc. Is the market taking this a little lightly, or does it have one wary eye on these developments? What's your sense?
So basically, Prashant, by the way, good afternoon to you and your viewers, and thank you for having me on your show. The fact is that everybody is right now betting on sanity prevailing on both sides, right? I mean, there's always, what is the reaction to this? Whatever actions we take, there has to be some reaction, but how limited are they will be the way to look out. In fact, the perfect one would be if the way it happened in Balakot, I assume, because Pakistan denied that anything had happened, right? So I think that's what the market is looking at, and I won't spend too much time on this also anyways, but the fact is that a couple of overhangs are over. I mean, obviously the India and Pakistan tension is the one which is a big overhang today, but the other overhangs like the tariff wars, I think some sanity is prevailing in the US. They've taken a 90-day pause. Probably till 9th of July, I think things are still on pause. So let's see what happens after that. So that was a breather for the market. One good thing was that I think the US President, Mr. Donald Trump, he really bowed down to the markets. And that's what is helping us believe that he'll come back with some sensible solution whenever this 90-day pause goes away. So that was one big overhang which was over. I think now from here on, one has to look at what's happening in India, what's happening with our markets, what's the fundamentals looking like. And frankly, they are feeling, the feeling is that the March quarter will again be nothing to write home about. I mean, the nifty components which are reported thus far, they've seen a low single-digit kind of growth on a consolidated basis. There've been a fair bit of disappointments. If I was just reading up a report that of the total numbers which have been reported thus far, some 60-70% have been disappointments as such. So that's not helping, right? I mean, the big rally which came about, I think, came on the back of one, relief, and secondly, the way the FIs came back in big numbers. I think that's what's helped, and from here on, one has to look at pure numbers.
But it said, I think the pace of earnings downgrades is, so far at least, is less than what we had in the prior quarter. So although we have seen, a lot of, downgrades, but it just seems that the pace has come down a tad bit. By the way, you should keep your eye on Trent, because Trent numbers are expected and the stock is moving up a little positively. Remember, Trent is a stock which has fallen 37% from its 52-week high. We already have a cheat sheet. The company has indicated in the pre-quarter update that the top line growth will be 28%, which analysts point out will be the lowest in 16 quarters, and FY25 revenue growth should be 39%. Pull up that intraday chart of Trent, a little bit of a spike. So Dinshaw, hi, afternoon. So what have you been doing in the last 1 month through this volatility?
Just let me get back to you on that downgrade numbers being less than what they were last quarter around. The fact is the first of the block reportage is normally strong corporates, right? So that's why you're not seeing those. And the fact is that these strong corporates also have seen downgrades happening, which is fairly a worrisome factor. Having said that, what we've been doing, however, because we were very worried about this tariff war going out of hand, and as a result, what we did was we did conserve a bit. We said let's look at only the domestic facing stocks, those which are not impacted by these kind of uncertainties in the global market. And that's what we try to do. And once again, if I remember right, on your last show, I told you that these are places to hide at that point in time, because if this uncertainty goes on for a while, it's a matter of a few quarters before they also get impacted. But fortunately for now, I think that's worked out fine for us. We've I think, 80-85% of our stocks are, other the sectors that we are in are BFSI, hospitality, hospitals, consumers. These are the few that we're in today.
Got that. You know, there is a EV IPO which is on as we speak, which is Ether. But
have you on the show this afternoon. Great conversation as always. Let's talk about this, the automotive space. Not that there are too many big numbers that are firing up. I mean, growth has been missing. Barring Mahindra and Mahindra, most others have been struggling. But in auto, would you like anything and any interest in some of these pure play EV stories that are now coming to the market?
So yeah, I don't know whether how many of you have seen this, but we are anchors in one of the anchors in Ether. And the fact was that with a value share of more than 20% and a market cap, asking market cap of $1 billion or dollars, that didn't make sense to us, actually. I think that was a fairly appealing, though we don't see much of profits going forward in Ether also. I mean, the way the Ola is doing also. So the fact is, it's a much more, I think, premium bike as compared to what Ola offers. That's the kind of call we took. And that's why we felt that this was a good EV play to enter as such, and probably the only EV play that we have today. We also have a two-wheeler play, which is disclosed in our portfolio, which is Bajaj. Basically, the fact is the entry-level vehicles is two-wheelers is what we're looking at, given the kind of SOPs the previous budget gave on the income tax front. So these are a few auto plays that we have. Otherwise, we don't have much exposure. As you know, that we are quite negative on a disruption in the auto space brought on by EVs as such. And that's why we're staying away.
So, Dinshaw, you're saying that you don't see even Ether, and thanks for telling us that it offers good perspective on, why you would take that anchor position. You're saying that you like the business, but you're not looking at too much of a rise in profitability immediately. Did I get you right?
So basically what I'm saying, Subhi, is that for overall market, if you're giving it, as I said, the value market share for Ether is 20% plus odd, right? We can keep disputing. Let's even assume 20%. The fact is that we cannot assume that the overall India market is going to be just $5 billion. The market cap of all EV plays in India is going to be $5 billion. And that's why we said that, look, it's a matter of time before the market cap in India of EV players moves beyond, say, $10-20 billion or more, in fact. And that's why we said that, okay, looks like it's come at a very decent price. And as I said, EV itself, the break even itself will take a while for Ether to play out in. But I think the valuations are fairly appealing given the growth rates that we're expecting from the industry.
All right. Hi, Dinshaw. Good afternoon. Good to see you in. What about the quick commerce space? It's making our lives easier, but the competition is getting a little bit more intense in there. You all look quite positive. What's the view?
So basically what we did, Nigel, was we used to own both the quick commerce listed players, right? We got out of one because we didn't like their strategy of fighting discounts with discounts. We remained with a bigger player, if you will, which is eternal. The Zomato was well, Zomato as such. And we remained with that. Again, even if there is competition building in, the fact is you need to get the logistics right. You need to get the algos right in this business. It's not just about setting up dark stores. If that was the case, there would be a lot of all the big corporations in our country would have come and swarmed the place with these kind of logistics businesses as such. It doesn't work that way. I think it's a winner-take-all kind of a market. We've seen that in the case of, say, Meituan in China, or for that matter, DoorDash in US. So I think that's where we're coming from. And I believe that there's enough potential left in this industry to see healthy growth, even with some competition coming in.
All right, just one word. The state cabinet, Maharashtra state cabinet has approved the EV policy. And the word that we have is passenger EVs will be given bigger subsidies. And that's why a couple of stocks are in focus, as our ticker team was telling us. Tata Motors as well as Mahindra & Mahindra, because they have exposure to passenger vehicle EVs. So just wanted to highlight that for our viewers as well. At the bottom of your screen, we'll try to get you further details. But for the time being, Tata Motors seems to be one, and Mahindra & Mahindra. Guys, back to the studio.
Absolutely, and we'll keep an eye out on this one as we parse through some of the details about what has really been approved. Dinshaw, we'll thank you here. Appreciate your time here on CNBC-TV18 and look forward to the next conversation.